Why and how the Ethereum Merge is going to change everything. By this point, the vast majority of crypto and blockchain enthusiasts are familiar with Ethereum. There are a few reasons why Ethereum and its open-source decentralized blockchain will bring about global change, much like Bitcoin did. Still, if you don't know anything about Ethereum, I recommend you watch our previous video on this topic before diving into this one. In this video, we'll talk about the Ethereum Merge, why some analysts are saying Ethereum 2.0 may overtake Bitcoin after the merge, and why, even if it doesn't necessarily overtake Bitcoin, it will change the world. Before we get into it, we wanted to thank you for watching. If you want to be the first to get the latest crypto and blockchain updates and news, subscribe to our channel and hit that bell icon. Payments made using Ethereum are confidential and safe. Ethereum's real-world uses and value storage make its utility more promising than Bitcoin. All signs point to it being the future of programmable money and smart contracts. While Bitcoin is the first and original cryptocurrency, Ethereum was blockchain technology's first mass-market application that global enterprises, SMEs, and consumers could utilize. As the Ethereum network enables and facilitates the installation of new apps on its architecture, many individuals have utilized it to establish payment systems. In recent years, Ethereum's use rate has surpassed that of Bitcoin, thanks in part to the exploding popularity of NFTs. People like the Ethereum blockchain because it's private and decentralized. If you use credit or debit cards to make a purchase, companies will have your information and may sell it or use it to market additional items and services to you. With Ethereum, anonymity is built into the system where you're just a string of numbers, so cash moves in and out safely, securely, and decentralized. With Ethereum, your data is safe. Why Ethereum 2.0 may overtake Bitcoin. As Ethereum's much-anticipated upgrade, known as the Merge, is right around the corner, the cryptocurrency trading volume is booming. The second-largest cryptocurrency overtook industry leader Bitcoin a few weeks ago in the options market for the first time in crypto history. Analysts see this as the latest sign that Ethereum may soon shoot past Bitcoin for the #1 spot in crypto capitalization. According to data from Arcane Research, the open interest on ETH options contracts recently climbed to a whopping $8.1 billion, significantly higher than the $5.5 billion locked in open Bitcoin options trades. The Ethereum Foundation welcomes developers from across the globe to build decentralized applications. On their website, the mission states, the Ethereum Foundation's mission is to promote and support Ethereum platform and base layer research, development, and education to bring decentralized protocols and tools to the world that empower developers to produce next-generation dApps and build a more globally accessible, free, and trustworthy internet. According to State of the dApps, there are approximately 3,000 decentralized apps on the Ethereum blockchain. These developers may seek funds for their initiatives like Uniswap did, the world's biggest decentralized exchange. Many Ethereum blockchain applications are already altering the world by providing new methods to transfer property, cash, debt, equity, and even construct multi-metaverses safely and securely. Ethereum 2.0 will change everything. Until the second or third week of September, we're still in Ethereum 1.0, which has been fantastic for its time, but is now crowded, difficult to grow, and employs old technology in issuing new tokens and conducting transactions. It's for this reason that the Ethereum Foundation is releasing Ethereum 2.0. The improvements made may be the innovation needed to make cryptocurrencies viable for daily payments and banking. The launch date for the start of Ethereum 2.0 is September the 6th, 2022. There'll be 2 stages before it will be made available for public use. The first stage, Bellatrix, happening on September the 6th, and the final stage happening between September the 10th and the 20th. To begin, Ethereum 2.0 has a substantially lower effect on the environment than Ethereum 1.0. At the moment, an essential part of Ethereum's proof-of-work mechanism is the need for large amounts of electricity. Proof of work uses more and more energy over time. Ethereum 2.0, however, will cut energy use by 99.5% by switching to proof of stake. Ethereum's improvement will undoubtedly decrease network congestion, presumably resulting in lower gas prices. For the first time, Ethereum 2.0 will be able to run thousands of dApps and other scalable applications for thousands of users. The finance industry and smart contracts. Blockchain technology and, in particular, smart contracts are seen as a revolutionary innovation that may impact the future of the financial sector, especially the banking industry. On the other hand, financial institutions have become hesitant to employ permissionless settings because they claim that setups do not provide enough protection for customers' personal information. Most of the world's major financial institutions have been participating in consortiums evaluating blockchain technologies and their implementations in recent years. The Ethereum blockchain, open to the public and without permission, was also used by Societe Generale for a current $112 million bond. This indicates that the whole sector is becoming more accepting and does not perceive blockchain as a danger anymore. Instead, they see it as a technological revolution that should at least be studied and understood. Nearly 5 years have passed since Ethereum first introduced the concept of smart contracts. Smart contracts have the potential to completely transform the landscape in many significant industries for 5 specific reasons. Number 1. Smart contracts may replace time-consuming legal documents. All this data would then be available and visible to regulators. Number 2. Smart contracts may drastically change clearing and settlement. Execution, clearing, and payment would become streamlined, reducing counterparty risk. Number 3. Blockchain technology may allow banks to communicate directly, enabling seamless cross-border transactions. Corda is working on sharing a ledger for transactions and contracts between 2 banks as you're watching this. Number 4. Smart contracts may provide conventional asset classes like shares and bonds, as well as tangible assets like art and real estate. Number 5. Digital identification enables banks to keep and update customer information more efficiently. The increase in NFT utilization. CryptoPunks and CryptoKitties were 2 of the first NFTs to hit the market in 2017, and they rapidly became popular with investors and consumers alike. Since then, the NFT market has grown tremendously, with the Ethereum blockchain being a significant contributor. Ethereum enabled smart contracts first, which simplified digital asset ownership and transferability. The ERC-721 token, standard designed by Ethereum specifically for minting NFTs, was also created. Ethereum provided the groundwork for NFTs and cleared the road for the digital asset revolution. Since most NFT projects were built on Ethereum, wallets like MetaMask made NFTs compatible with the Ethereum Virtual Machine, or EVM for short. EVM is a decentralized computer that manages millions of Ethereum projects. NFT designers had to ensure their projects were EVM compatible in order to have an operable project. Now, several Ethereum-based NFT markets like Rarible, OpenSea, and Nifty Gateway, etc. have been hosting investors and consumers alike. The NFT market has grown dramatically within the past year and a half. In 2020, most NFT platforms didn't exist, but 2021 saw a surge in transaction volume. Even if this trend slows, NFT usage will likely be around for a long time. Unsurprisingly, celebrities have hopped on the bandwagon as they see a new way to communicate with their followers and grow their communities. NFTs have been used for a lot more than just digital art, of course. In reality, one may use them to signify ownership of any one-of-a-kind object, such as a title deed for a piece of property that exists in either the digital or physical world. Fungible goods, however, may be swapped since their worth rather than their unique features identifies them. For example, an ETH token or a dollar can be exchanged for another ETH token or dollar, making them fungible. NFTs and Ethereum address various difficulties on the internet today. As everything becomes increasingly digital, we need to recreate physical attributes like scarcity, uniqueness, and evidence of ownership. Not to mention, digital products only function in their development. For example, you can't resell an iTunes MP3 or trade one company's loyalty points for another platform's credit, even if there's a market. Here's why NFT creators love the Ethereum blockchain. Number 1. Transaction history and token information are publicly accessible, making it easy to establish ownership and track an asset's history. Number 2. Manipulating transaction data is almost impossible, and it's also increasingly difficult to steal ownership of an NFT. Number 3. NFTs might be traded peer-to-peer without middlemen that take massive cuts. Number 4. Ethereum items have the same backend. This means that all Ethereum products can interact. Therefore, NFTs may be utilized in many different ways. Number 5. Ethereum has never gone down in the long term, making your ETH holdings more accessible. Creating memorable Ethereum addresses. The Ethereum name service employs NFTs to rename Ethereum addresses like mywallet.eth. You may ask for ETH through mywallet.eth instead of 0 plus 459874815. This makes an IP address more memorable, like a domain name, and therefore more accessible. Like domains, ENS names have value depending on length and relevancy. With ENS, you don't require domain registration to transfer ownership. Instead, you may trade ENS names on an NFT marketplace. ENS may receive cryptocurrencies and NFTs, point to a decentralized website like Ethereum.eth, store arbitrary data like email addresses and Twitter usernames. The massive gap between Ethereum and Bitcoin is connected to the fact that BTC has not registered as much volatility as ETH on the crypto market in recent weeks. Furthermore, future premiums and funding rates in Bitcoin have been relatively low as trading activity in BTC derivatives decreases, suggesting that traders are not interested in gaining long exposure. Ethereum's historic leap over Bitcoin in the options market comes as investors have started betting, so to speak, on either outcome after the merge is executed. This major software upgrade is expected to significantly reduce the rate at which new ETH is produced and distributed, and make the cryptocurrency more appealing as a store of value. The merge, slated for within the next week, also makes the current Ethereum network, which has been prone to bottleneck congestion and exorbitant transaction fees, faster and more scalable. That said, in terms of market cap, Ethereum at $180 billion is half the size of Bitcoin as it stands, whose market cap stands at $382 billion according to CoinMarketCap. Some industry pundits, however, are still confident that Ethereum will overtake Bitcoin. Thank you for taking the time to watch this video. Don't forget to smash that like button and subscribe to stay updated and to be the first to get our crypto, Web3, NFT, and blockchain updates and news.